Just a point of clarification. In my initial questioning, and this is for Mr. Barnes, you spoke about, I just wanted to be checked that you were expecting a surplus of 4.2 billion rather than 1.2, which to me is a difference of 3.3. But when you spoke about, there's within that 1.2 billion, the government are bringing forward 2.5 billion of temporary measures, correct?
Yeah, it seems they do that.
So therefore, the 3.3 billion on top, that's completely separate from me. So the way I look at it at the end of the day is that you mightn't agree with it, but just factually, the government can spend really between 2.5 and technically 5.8 billion on temporary measures and still meet their targets that's set out under summer economic stim. I'm not saying they'll do that. I'm just saying there is scope in that space. And even if you were to put 500 million into a rainy day fund, you're looking at of the order of about 5.3 billion rather between 2.5. So can you clarify that point? Am I correct in saying that? Factually correct. I know the inflationary aspects, but it does once-off measures now. Once-off measures.
So I think the maths is right, but but it doesn't. The government doesn't have a budget balance. Doesn't have a target for the balance.
Yeah.
The target since last year, and this is in our view a great.
Well, they have a target under the summer economic statement of a surplus of 1.2 billion.
So that's a forecast, but it's not a target.
Well, yeah. It's the most up-to-date figure we have.
No, not really. So I would respectfully disagree.
Yeah.
There's a very significant thing happened last autumn, which is the government set out a new spending rule. Fine. This is something we'd advocated for a long time, and it's a very actual. It seems to be a very fundamental shift in the way the budget's dealt with. In the past, the government sort of essentially relied on some decision they took over the summer. They would come up with some number, whatever, 3 billion it was, right? And that would kind of be their target in the SES. And exactly where that number came from was never very clear, and it changed from year to year, basically. What they did last year was a fundamental change. They essentially moved to a more rules-based system, and they basically said that they were going to target this core measure of spending, and they were going to increase that by 5%, which is every year, which they judged to be the sustainable rate of growth of the economy and of the tax base. And that would help to stabilise the economy by having this smooth rate of spending, and it would also help to bring debt down, which was needed. So that I think should be viewed as the real target. So that hasn't really changed, except that in the SES, rightly in our view, just because inflation is so far away from the assumptions under the 5%, they gave themselves a bit more space by going to 6.5%.
I accept.
So that is the real target, and so that's the amount of space they have for spending. And essentially, irrespective of what happens to the budget balance, that would be their target.
So the 3.3 billion that they will take in above that, what do you propose they do with that?
So essentially, those measures, in normal times would go into, would be saved. So they would go into a budget surplus, and that would ultimately reduce debt. Now, what they can do is, instead of reducing debt, they can put it into the rainy day fund, or they could put it into the National Pension Reserve Fund. In an economic sense, that's kind of similar. It's just that I think for people to see this big surplus and then say, like, why aren't they spending it? It's much easier to articulate, to say, well, this is actually the CT money.
The point Mr. Barnes I'm making is for the ordinary person out there, right? I know I have a specific question. For that 3.3 billion, which is unexpected taxes, right? Mm. So is there ever a situation where that can be used, put your $500,000 into your rainy day fund, where that can be used in a targeted way in a once-off measure? We're in a wartime situation with energy prices. And what's happening in Russia is partially the reason why gas prices are gone up, right? So is there any circumstance in which you would, in targeted measures, as a once-off measure, some of that 3.3 billion could be used for that purpose?
So absolutely. So some temporary measures in these circumstances, which you say are extreme, they're situations provoked by war, and people are really suffering. Temporary measures are entirely appropriate, and we can finance them in a way through the money that's coming through corporation tax. Fine. But if we didn't have that money, we could also finance it through borrowing.
So that's my second question. What is the scope for the government? I read your piece on our borrowings. They're low interest rates. The secondary bond market bond buying that the European Investment Bank, the European Bank, Central Bank have gone back into has brought down interest rates. What's our scope in if a catastrophe situation happens next year where energy takes over, it goes out of control, it has huge impact on our growth, it brings down our taxes, it puts pressure on our day-to-day functioning. What is our capacity? We borrowed heavily during COVID. What's our capacity, in your professional opinion, to be able to borrow where something extreme happens over the next 12 months?
So I think that...
Sorry, Mr. Barrett, I might ask you to answer quickly,
Succinctly,
because
the answer is simple, which is overall our capacity to borrow is currently, and to deal with these kinds of emergencies, is good, which is a fortunate position to be in.
So we could borrow 20–30 billion at the moment?
If the circumstances arose where that was necessary, but we shouldn't do it in other circumstances. That's what's very important.
Good to know.
Thank you.